Well, AMD just reporting earnings, and we're seeing those shares getting a big lift on the back of that. The stock up more than 5%, with earnings coming in better than expected. Earnings per share coming in at 58 cents a share, beating the estimate by a penny. As for revenue, that came in at $5.4 billion versus the estimate of $5.32 billion. Seana, a few things to point out here, though, because this was some of the concern going into this report from analysts looking into AMD. Data center revenue missing there. That was sort of indicated when we saw Intel's numbers last week, pointing to kind of a muted outlook. Gaming revenue also a miss, coming in at $1.58 billion versus the 1.6 that was estimated there. And we are, Lisa Su in the statement coming out today saying the third quarter, we expect our data center and client segment revenues to each grow by a double-digit percentage sequentially, driven by increasing demand for EPYC and Ryzen processors. So the outlook right now, the company's seeing revenue of $5.4 billion to $6 billion right now. So sort of, the estimate was at $5.84 billion. So kind of right along the consensus there. The stock, though, getting a big lift there now, up more than 6%.
And when it comes to the data center, they're kind of countering some of the fears that were out there on the fact that maybe we would see clients here hold off on server spending in favor of some of that newer AI technology. But it does look like the demand is there. A lot of focus within this report on AI and specifically what AMD is doing in AI, that push there. The company saying that they're making further inroads in AI computing. And in the statement here, Lisa Su also saying that our AI engagements increased by more than 7 times in the quarter as multiple customers initiated or expanded programs supporting future deployments of Instinct accelerators at scale. So again, third quarter revenue, they expect $5.4 billion to $6 billion. Compared to the average analyst estimate there of $5.8 billion. So essentially, like you were saying, in line at the midpoint of that expected range. But again, some excitement in the stock and extended trading with shares up just about 6%. So certainly better than what the street had been anticipating.